Welcome to The Explainer, where we break down complex topics into clear, dynamic presentations. Okay, so picture this. It's August 12th, 2025. A single number gets released at 8:30 in the morning, and just like that, the markets go wild. So, what was this number? And more importantly, why did it matter so much? To really get why everyone reacted so strongly, you've got to understand the mood on the street right before that news hit. I mean, Wall Street was literally holding its breath. So the market had just had its best week in over a month. You'd think everyone would be feeling pretty good, right? Nope. The good vibes vanished pretty fast. By Monday, anxiety was creeping in, big time, all because of this inflation report everyone knew was coming. The Dow actually dropped over 200 points. Then Tuesday morning, silence. Seriously, stock futures were flat. The entire market was just waiting for that 8:30 a.m. number. And that brings us to the main event, the report itself. This was the number that was going to decide everything. Was all that anxiety justified, or was the market about to get the green light it was hoping for?
Okay, 8:30 a.m. hits and boom, the Bureau of Labor Statistics drops the Consumer Price Index, the CPI. Now, this is the big one. It's basically the official report card for inflation. It measures the average price change we all pay for stuff. And believe me, the Federal Reserve watches this number like a hawk.
So everyone on the street was bracing for a not-so-great number. The consensus was that inflation would probably tick up to 2.8%. But then, the real number came in, and it was 2.7%. Just 0.1% lower than expected. Now, I know what you're thinking. 0.1%? Who cares? Well, in the world of high-stakes finance, that tiny little difference, it changed everything. And here's the crucial thing to understand. It's not that inflation was suddenly low, because it wasn't. The key was that it wasn't hotter than everyone feared. As one strategist, Seema Shah, put it, this report wasn't hot enough to stop the Fed from cutting rates. And that was the signal the market was desperate for. And you could see the shift in thinking almost instantly. The market-priced odds of the Fed cutting interest rates in September, well, they went from about 84% to over 90% in a flash. Just like that. It wasn't just hope anymore. It was basically a done deal in the market's eyes. All right, so the market is now overwhelmingly betting on a rate cut. The big question is, what happens when the opening bell finally rings? How does that bet turn into actual money moving? And boy, did it move. The second that opening bell rang, it was like the floodgates just burst open. The Dow, the S&P 500, the Nasdaq, all three major indexes shot up. We're talking more than 0.5% right out of the gate, all fueled by this newfound optimism. This isn't just some abstract thing for Wall Street traders. A potential rate cut has real-world consequences for pretty much everyone. I mean, it can make it cheaper to get a car loan or a mortgage. For businesses, it makes it easier to borrow money to grow and hire. It's the kind of thing that can really get the whole economy humming. But here's where it gets really interesting. If you just looked at the main indexes, you'd think it was a great day for everybody. But peel back that top layer and you'd find total chaos. It was a day of huge winners and huge losers all at the same time. I mean, look at this. You had C3.ai just getting hammered, plunging 25% because of some weak projections they'd put out. Celanese, another one, dropped almost 20% after warning about a slowdown. But then, on the other side of the coin, you have Hanesbrand. Their stock just exploded, soaring 34% because of rumors they were about to be bought out. And even politics got in on the action, with Intel getting a nice 3.5% bump after their CEO met with President Trump. A wild ride, for sure. And the corporate drama wasn't over yet. You had Elon Musk publicly threatening to sue Apple, throwing around words like antitrust violations over its App Store. A huge deal, right? Well, for Apple, not so much. Their stock barely even blinked. In fact, it ticked up a little. Talk about a resilient company. Okay, so let's pull back from the individual company drama for a second and look at the bigger picture again. What else was going on? Because that one inflation number, as important as it was, didn't just happen in a vacuum. There were other huge forces at play. And this is a really big piece of the puzzle. The night before all this happened, the White House extended its trade truce with China for another 90 days. Now, this was huge. It meant a massive 145% tariff hike was put on hold. That move basically took a major potential crisis off the table and created a much calmer environment for the markets to digest that inflation news. But there was this political cloud hanging over all the economic numbers. You really have to look at the sequence of events here. First, back in July, we get a jobs report that's kind of disappointing. Then, on August 1st, President Trump fires the head of the Bureau of Labor Statistics, the very agency that reports these numbers. Fast forward to August 12th, the same day as the CPI report, and a new agency head is nominated. That whole chain of events, well, it definitely raised some eyebrows.
So, what are the big takeaways from all this? Well, first, it's crystal clear that the market is obsessed with every single decimal point inflation data. Second, big geopolitical news like that China trade truce really does set the stage for everything else. Third, and this is a big one, a rising market doesn't mean everyone wins. You still have to pay attention to what's happening with individual companies. And finally, the political pressure on the agencies that give us this data, that's becoming a huge factor that investors just can't ignore anymore.
And all of this leaves us with one pretty big nagging question. We live in a world where trillions of dollars can move based on a single government report. So what happens when people start to question whether they can even trust those numbers? How does the market function when the integrity of its most important data is up in the air? That's the tough question that I think a lot of investors are wrestling with right now.